All right. Hello. Welcome back to another market open. Here we go. We are here. I'm sorry we were late. Had to finish a couple things, but we are officially here. Now, I know this side of my face looks kind of crazy and there's a lot of colors and stuff. It's because there was an Indian holiday yesterday called Holi. And on that holiday, basically, you're supposed to like throw colors on people. And so my mom got a bunch of these colors and she started throwing it on me. And I couldn't shower last night because it was late at night. So I'm going to shower right after this. But yeah, half of my face looks a little red. It definitely describes a little bit of the pre-market we have going on, which we're about to get into right now, which is that Tesla, let's see if it's still there, is below 180. TJ the Wheel Deal, what's up? We got a bunch of people here in the chat. Lego my Dago Bell incoming. What's up? Joseph Viego's YouTube do not notify me. Yeah, YouTube messes up on these sometimes. Zocold, what's up? Mark, Sethi Roth, Jason, Dex, Ray, Ty, Tessa, Geis, Amit, I'm never late. Kane, Mark, Star Buccaneers, Adam, Petro, Philip, Rizzo. Thank you all for being here and joining again on the Market Open. Emmanuel, my guy, what's up? I hope Jamaica was fun. Paul Gogan, what's up? Rolling into the red. That is correct. Rolling into the red. All right, so let's open up, Felicia, hello, this stock chart. I did buy some Tesla at like 189. I think about like 7 shares on Monday. And of course, we got to get down. Tesla's exactly 180 pre-market. It's interesting. I've seen some people do some technical analysis saying they see Tesla going down to about 165. Could that happen? Maybe. Could that not happen as well? We'll see. But in general, it's interesting because some stocks are green pre-market. Kathy Wood bought another 1.3 million shares of Ginkgo Bioworks yesterday. So it's only $1 million though, because it's like $1 a share, right? So it's like a couple $1 million. It's not a lot to her, but she is buying the stock. Enphase at 218, Nasdaq 11,576. Some stocks are up, some stocks are down. Disney, Apple relatively flat. Tesla's down. Occidental, Berkshire Hathaway now owns 22%. Or it's 22 million shares and 12%. It's one of those numbers. I'll get the exact ones, but they own a lot of Occidental. And one of the reasons could have been that I think a couple of days ago was the last day to buy to qualify for the dividend. So that might have been one of the reasons they bought. But they are definitely either bullish or they're looking for a quick little money grab on petroleum. Palantir at 813. Palantir down pretty massively from yesterday's highs around 849, 815. Why is it down? No idea. Palantir's Alex Karp. I'll probably do some videos a little later reacting to his interview that I posted on my channel yesterday. It was a great interview. I mean, some of the stuff he was talking about in the BP guy, the BP is one of their biggest clients. I didn't know BP bought 1% of the company. Now they divested those shares. They bought like $413 million worth of Palantir back in 2021, and they sold. But the fact that the software worked so phenomenally for their company that they had to buy a percentage of the company was a very interesting thing. And, you know, I'm someone who knows Palantir really well, and I didn't even know that thing happened, which was pretty interesting. Can't you get 4% savings and not need to lock up your money? Well, I'm putting my money in Robinhood's 4.15% savings, so I'm getting some money from there. Michael, what's up? Gabe, what's up? All right, here we go. It's 9:30 a.m. March 9th, 2023, 9 days into the new year. If you are listening on headphones, get ready. If you are watching, it's time to enjoy because the market is open. Wake your ass up. The market is open. Disney 99.38, Apple 153.08, up 0.17%. Tesla 180 down 0.93%. Let's see where Tesla goes today. Coinbase 62, CrowdStrike 128, going down a little bit from its pretty good earnings, but overall still up from the numbers they put out. Meta going back to hitting 190. The run up for Meta is likely due to two things. Number one, more layoffs that are coming, haven't officially been announced yet, but seems to be down the pipe. And number two is this potential TikTok ban that's getting a little bit more serious, also from the Democrats, not just from the Republicans. And I don't know. I mean, it might just end up happening. So we're going to have to see. If it does happen, all of that content's going straight to Instagram and YouTube. And so Google and Meta will be up that day if that news comes out. Bitcoin 21,000, Nike 120, Ginkgo 13. Again, Ginkgo fell down to like 125 or something yesterday. Kathy's still buying the dip. So it doesn't seem like other investors are helping her, but she's doing her best to buy the dip as much as she can on this stock. SoFi at 645. SoFi now suing the U.S. government about student loans. Honestly, I think that's kind of ridiculous because if the Supreme Court strikes down Biden's student loan, he will probably find a way until he gets reelected to make sure people don't have to pay student loans, I think. And so SoFi suing them, to me, is kind of dumb, because they're not going to be able to get out of this situation. I mean, like, Biden, it's a political thing at this point. It's been 3 years. Biden's like, well, why don't we make it 4 years, 5 years? I kind of think the Supreme Court might err with Biden, which is that not only is the 10,000 potentially constitutional, but the case itself shouldn't have been brought up to the Supreme Court. That was the loophole I was talking about yesterday. I was reading a bunch of more articles about it this morning, and there might be a shot where Joe Biden doesn't have to doesn't need the case to even go to the main vote, because the current vote says that it's unethical to even talk about, not unethical, but it's unconstitutional to even bring that case to court. So the executive power would still hold weight. Nvidia up to 242. It was at 234 yesterday. Nvidia puts getting destroyed. Nvidia going up. Amazon 93. Robinhood 958. Kathy Wood bought another 200,000 shares of Robinhood yesterday. Amazon, we talked about that. Google 94. Pinterest 25. Yeah, relatively flat this morning. Some stocks are up, some stocks are down, but no major swing right or to the down or to the upside for these companies. Justice Army is doubtful on Palantir on plaintiff's claim. Yeah, exactly, right? The Justice Amy is doubtful on the plaintiff's claim to even bring that up to the Supreme Court. And if that's the case, then that's that's going to be hard for them to argue that it makes sense. Let's check Tesla on the RSI, which is the relative strength index. Where's the RSI here? Usually, hold on. Usually it shows up right at the bottom. Do I need to press a different button? Oh, hold on. Oh, there it is right here. Oh, wow. It's at 45. 45 now. So it was at 70 right around the 216 range. And now, interesting. Very interesting. So it's now at 45. 45 is not crazy. 45 is not crazy. I could understand at 217 why it was at 77. Where's Palantir on the RSI? Does the RSI say Palantir is overvalued? Palantir's at 50 right now. So not crazy. It was at 70 when we got to this damn RSI, bro. Ever since I learned about it, it was just like, oh, if it's above 70, you sell because it's overvalued based on this relative strength index. Now, that doesn't always have to be the case, but a lot of times it's like, yep, 1031, RSI, it's over 70, sell that and just wait till it comes back down. Obviously, it's not a perfect indicator from a technical perspective, but it is an indicator. Let's look at NVIDIA on the RSI. NVIDIA is still 64. Wow. Even today. Oh, no, sorry. NVIDIA 71. It was 79. But hold on. Let me look at it a little bit on the daily. There we go. Yeah, it looks like it's 64. No, it's 64 on today. Yeah, 64. It was a little bit higher back then. So NVIDIA's still not creeping up towards 70 on the RSI. Now, if I go to the max right here, you got this bad boy is at 80 on October 29th, 2021, and I think we all understand why. It was 346 was a lot. Yeah, it's inching towards 70, but not fully at 70 yet. Right now, it's like 59. Interesting. There is more to TA than RSI. Yeah, 100%. And I don't know all about that, but I do understand a little. RSI is meaningless. I don't think RSI is meaningless. I think it is from what I've seen, and this is purely subjective, when it goes above 70, that stock starts falling. But obviously, it's like that's not always going to happen, but it's interesting. What's DNA? DNA is basically call them Amazon of biotech companies. They are a biotech that creates a platform for other companies to use their robotics, their AI, their machine learning, their like square feet facilities, etc., to launch biotech companies. So the reason I think Kathy loves them is because you're not betting on a drug, because then it's like if the drug fails, it's whatever. You are betting on a company that is a AWS of drugs, an app store is a better way to call them, of drugs. And because they allow companies to use their platform, they get to keep an equity stake in all those companies. And so that's the interesting element about Ginkgo that got me excited a long time ago, because biotech is interesting, But what's more interesting to me is all the applications of synthetic biology that their platform enables. And synthetic biology is like this plastic Gatorade bottle. Like someone has to make the plastic, right? Like, and there's a lot of, and this market for creating like actual physical goods massively overtakes the digital market and the computer market and the information market, because it's the stuff we all have to use as human beings. And so the companies that are able, so for example, DNA partnered with some companies to make synthetic cannabinoid. So it's like they literally made weed synthetically in a legal way in Canada because their platform allowed the facilities for them to do it. So you can imagine the use cases of this over the next 10 years as synthetic biology becomes more popular. And then you're taking a bet on the platform that has the ability to encompass all those use cases and allow startups to use them in a meaningful way. I've done a lot of history on them. I really like them. I didn't like management selling this year. I didn't like the stock-based compensation. Obviously, the market doesn't like it either, which is why they've tanked the stock. But it's starting to get a little bit more attractive at $1, right? $1.20. Now, could it drop lower? 100%. 100%. But it's just a question of, where we think it could be. All right. Jeremy Siegel from Wharton. He's got a lot to say about the Fed. He's always said the Fed should not be raising rates. He's been looking kind of wrong given what's happening with inflation. Let's see his new thoughts and what he has to say. What's their moat? Why can't some big company make the same tech? Well, you got to look into them a little bit. Synthetic biology and the platform they've created. There's only one other company doing this. It's called Amiris. And Amiris doesn't even create a platform. They create their own products. So when I mean Ginkgo has no competitors, they actually have no competitors. It's very difficult to do this thing, which is why their likelihood of failure is a little bit more higher, right? No companies want to try to do this, but they actually are a monopoly. Now it's just a question of them being a profitable and meaningful monopoly, right? All right, let's play this up.
Jeremy Siegel's here, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business. I'll just ask you the question I was asking Steve. What's your expectation? Are you at a 50-50 or 25 for next week?
Well, first let me say that I think that the Fed policy is very misguided. Let me tell you why. This month is the 3rd anniversary of the COVID crisis, March 2020. Over that period, wages have gone up less than inflation. It's hard to argue the wages are cause of inflation when they've gone up less than inflation. By the way, through history, wages usually go up 1 to 2% a year above inflation. So workers are way behind where they normally are over the last 3 years. But more importantly, Jay Powell himself has said there's a structural shift downward in the labor supply. Well, listen, Economics 101 says if there's a reduction in supply, we have to increase the real wage to clear the market. I mean, it is not the job of the Fed to offset a supply side shift. They control aggregate demand. So I think they're focused just on how tight is the labor market. Suddenly a maniacal type of a focus is the wrong way to go about it. Right. Look what's happening to prices.
There's 2 issues.
I don't know if he's correct about that. The labor market is incredibly important. There are 10.82 million job openings and 5.82 million jobs. That came out yesterday. That's not good for the Fed, because that means there's too many jobs chasing too little people, right? And like obviously COVID had a lot to do with people just not returning to the marketplace. So I don't know if Siegel's necessarily correct on that analysis.
What you want the Fed to do versus the question I'd be asking, which is what you think the Fed will do. And it sounds like you think the Fed will go 50 points and maybe you're scared that they will. And that's why you're saying, and you think that that's the wrong decision?
I definitely think that is the wrong decision. I mean, I agree with, I basically agree with what Steve said. If it's north of 200, now don't forget, we're going to have to look at the wage, and there is that CPI, which we've stressed is such a terribly backward looking index, that now he's excluded rent, as well as food, as well as energy. The so-called mini core that he's gotten to now is 20% of GDP that he's actually looking at. Look at the on-the-ground inflation indicator. Commodity prices are making new lows across the board. Freight, shipping prices making new lows. Look what's happening. What's going to happen to the housing market? You know the mortgage rate's back to almost 7.25%, almost 100 basis point increase in 6 weeks. Right. What do you
Yeah, see, when he says what's going to happen to the housing market, I think if the answer is, or the answer he's implying is that it's going to crash, I think that's what J Powell wants, right? Like he's acting as if like, oh, all this bad stuff's going to happen. By the way, Tesla and Palantir now up, Apple up, Disney up, a lot of companies turn green. He's acting like J Powell is going to be upset that they crash. J Powell has wanted the stock market to collapse for almost a year now. And it kind of has, like, but I don't know, the indices really haven't collapsed as heavily. Individual equities have. But it's like, oh, housing and mortgage is 7%. What do you think is going to happen to the housing market? Yeah, it'll collapse. Like, well, that's good because then that means less people buying houses, less people spending money, right? Like, I'm not saying that's good. I'm saying that I think Jerome Powell thinks that's good. I think that will get him to his goal of just like he right now is pretty ruthless of just getting inflation to 2%, and anything that's in his way, including people's lives, he does not care. And it's what I talked about on Monday. It's the tricky part of being in charge of the Fed. Like, this is what you've got to do. And it's and what's her name? Elizabeth Warren. I don't think she would ever want to make these decisions, but that's why she's not in that position. That's why she just gets to yell in front of a CPAC camera all day. Yeah, and all those jobs are McDonald's. There's a skilled labor needed gap. That's also true. 2 million people at the job market in COVID. This impacts the ability to force unemployment to rise. Yeah, I mean, look, if people are not working, it's just obvious. Like, there's not going to be more people to fulfill this stuff. How many people are full-time investors now compared to 2019? Crypto and the ride up in Tesla changed the playing field a lot. This is a great comment. Not only did people make hundreds of millions of dollars on crypto, particularly Bitcoin and Ethereum rising, and you get there was one guy who put 1,000 into Shiba Inu and it made him 5 billion. Like, it's when stuff like that happens, like, you're gonna get some inflation. And then Tesla made people a lot of money as well. And what Tesla did is it set the precedent for people to think that they are strong investors. And because people thought that they made so much money off Tesla because, at like 20x or whatever, they're like, well, I can go find the next 20x. And not only do they have the financial security to not have to work a job, they start playing with the markets, which means they start inflating and putting more money into the markets, right? Stuff like that happens. Your bricks will be worthless. These bricks are priceless. These bricks have been around forever. I copied a Sagar from the Breaking Points. That he is his background were the bricks, and I was like, oh, those look nice. I'll get bricks. And so I had these installed in my wall. That's how I got the bricks. Okay. Do you guys want me to talk a little bit about Spotify and their updates yesterday in the event? I don't want to spend too much time on it. I'm going to spend maybe like 3 minutes, but I think it's relevant. Spotify up 0.65%. RSI, it's at 45, so not too bad. If you guys are curious about my thoughts, if not, I can do a tweet thread later, but I only want to talk about it if you guys are curious about my thoughts, because I watched their Stream On event, particularly about podcasts, and I have some things to say, but only if you guys want to know. No, the reason he's not doing 50 basis points hikes is because he doesn't want to crash housing. Yeah, I mean, maybe. It seems more obvious than not, though, that we're going to get 50 basis points. And if we don't get 50 basis points, that's going to be very confusing by the Fed. And we probably should have got it last time. But cough, fake bricks, coughs. It's not fake, guys. I don't know what you guys need me to tell you. It's also not glued. If anything, it would be taped, not glued. But and the fact that they stayed so long. I want some sensitive documents to get leaked from Spotify so we can call it the Spotify. That's a good joke, guys. Okay, quick thoughts on Spotify. They had 15 minutes dedicated to their hour-long event around podcasts, and the first 2 minutes they talked about how their exclusive podcasts are hits around the world. The next 2 minutes they talked about how their scripted exclusive podcasts are hits around the world. The next 2 minutes they introduced more exclusive podcasts to be on the platform. The next 3 minutes they brought in Hassan Minhaj, the most unfunny person on the freaking planet. Yes, I said that. He is not funny at all. Try to watch his comedy and even tell me if you giggle. And I'm saying this as an Indian, I should be supporting him. He's not funny. But that's just a little side tangent on Hassan Minhaj. They brought him in to talk about how he's doing a new exclusive podcast, which is great for him. Again, exclusive podcast. Then the last 5 minutes, they bring in The Ringer. They paid $250 million for them in 2017 to talk about how they expanded from 5 podcasts to like 85 podcasts, creating 100 hours per week of exclusive content. And so why am I bringing this up? The only reason I'm bringing this up is because when I'm looking at this investor event and I'm trying to understand me as a creator who does not have an exclusive deal with Spotify, trying to internalize what this event is doing for me as a creator, because the whole point of the event is to be a home for creators. And I encourage you to watch it yourself. I'll probably put the link in the description. I encourage you to really watch the event so you guys know, like you watch it and you make your decision as well. For 15 minutes, they're talking about the exclusive strategy working, which to me indicates two things. Number one, they are not going to stop spending on exclusives because it's working. Those are the number one hits that they get. Same thing like Netflix, right? They're not going to stop spending on content. And number two, the home feed, where they're stressing like, oh, this new discovery, this TikTok style feed is going to be pumping all the exclusive content that they're creating. Remember, if you buy a podcast, you need people to listen to it in order for it to be profitable. How do people listen to it? It pops up in their feed. It's very simple. This is not rocket science. So the only thing I took away from the event was that they are continuously focused on these exclusive streaming strategies, and it's going to be really harder for people to get discovered on that platform. That's what I got from the event. But I want you guys to go check it out as well, just so you know it's not just me. Tell us how Audia will destroy Spot. Audia has to first figure out how to get Jason to invest, which, by the way, we are doing that as well. Thank you to everybody who reached out on Twitter. If you're not following me on Twitter, link in the description. You got to do it. Just do it. That's the only thing I want, is to follow me on Twitter. That's the only thing I want. The only thing I care about. So I will be pitching Cal Canis. I got the email yesterday. Let me just share this with you guys right now. I will be pitching our guy. I'll be pitching Jason Calacanis next Monday as one of the potential for him to invest in my startup. Was selected as one of 20 companies to pitch him. 2 minutes to convey a vision to one of the most legendary angel investors of all time. This one's not going to be easy. The pressure is on. Now, everything I just talked about Spotify, I've got to figure out how to convey that in a like 10-second way to get Jason to see kind of the differentiations or the gap in the market, which I think he already understands because he understands audio and podcasts, but to get him to really get it when it comes to audio. So it's going to be cool, man. Jason is someone I've been watching for like years, and it's like crazy. I'm going to be able to have a chance to like actually pitch him and talk to him and see what he has to say. It's going to be kind of wild, but we'll see what happens. Okay, let's see another clip. What do we got? We got Fed stuff. We got more interest rate stuff. We already know what's kind of happening with interest rates, which is nothing. Oh, let's go to this. All right, Apple moving potentially to India and doing a little bit more of not cutting down on their production. Let's go to that.
Bush analyst Dan Ives raises price target today to 190 on signs of rebounding iPhone demand. There you see him, joins us now. What is the evidence, Mr. Ives, of this rebounding iPhone demand?
Yeah, I mean, our Asia checks this week, which we finished yesterday, they're showing no cuts to production. And that's important because what we're really seeing through there is that demand looks strong out of China. I think a significant uptick, especially post-December. And ASPs, we believe, are close to $900. You put that in right now, they're tracking 3 to 5% ahead of where the street is.
But you use the word yourself, modest, in your characterization of the uptick that you've seen in demand in China. And I'm wondering, is quote unquote modest uptick, is that enough to make a broad statement about demand overall?
That's a great point, Scott. I think most suppliers were viewing that there was going to be actually downticks, that you're going to see potential cuts. And I think the fact that there's actually been an uptick, specifically in China, I think that continues to be hearts and lungs of what we're seeing on this upgrade cycle. That's what really stands out. And when you trajectory that out, you can now have, call it 6-7 million iPhones that beat for the year, despite what we're seeing, this macro uncertainty. And the ASPs are key. That's really why this continues, in my opinion, to be a Rock of Gibraltar tech stock.
But see, that you mentioned the macro yourself, which I wanted to ask you about. The danger of making a call like this in what is a still very uncertain macro. And I don't think you'd be prepared to make the statement that Apple's recession-proof, are you?
Not at all. And I think we've seen, I think Cook's talked about it, but I do believe that they have steel armor relative to that install base. I mean, that's really that's the golden install base that they have. And I think factored into what I believe is the services, as well as what we see with iPhone, in my opinion, I think this is one that's going to have upside the next few quarters, despite, what clearly right now is New York City cab drivers bearish on Apple and broader tech going into, what's clearly a white knuckle environment.
But I mean, the services business we already know is slowing. So is a modest uptick in demand enough to offset any of those concerns, enough that you would want to bump your price target up?
Yeah, and the services business, which we think is worth anywhere between 1.2 to 1.3 trillion, you now have about 120 million new iPhones over the last 15 to 18 months. Services attach rates, I think, is going to be strong there. We're seeing an uptick on App Store, as well as some of the things that are happening internationally. I put it all together right now, relative to where we saw this name even a month ago. I think we're seeing demand tick up. And I think that's important. What really goes into the drumroll iPhone 15 anniversary cycle, which will hit in September.
Is there any regulatory risk that you see at all? DOJ said to be, escalating their scrutiny of the third-party app issue.
Yeah, I think that continues to be headline risk. I mean, obviously the Epic trial, I think that really gave investors a lot of ad.
Apple to 190. I don't know, man. Apple to 190. Remember, 180 makes it $1 trillion company. I still have a video from January 2022 that I made when Apple turned to 1 trillion or 3 trillion. And I was going to post it like the day after, and I couldn't because then it dropped below 180 and then it never came back. And so that video is still stuck in my YouTube studio. I thought the thumbnail was pretty good too. Like I thought at that time I made a good one. I don't know, man. Apple right now is 53 on the RSI. Look at the max chart on Apple, starting at a cent in 1982, now all the way up to 181. Again, man, I don't know. For Apple to go to 190, it has to cross the psychological barrier of being okay with a $3 trillion market cap. It's 7.5% of the S&P. So if Apple gets to 3 trillion, the S&P is not going to stay at $400, right? So I mean, the entire market would have to shift given how big of a role Apple plays within it. Also, if Apple's going up naturally, you would imagine things are getting good because that means services are up. That means iPhone sales are up. That means apps are up. That means other companies using Apple as a distribution mechanism are also benefiting from Apple's increased share in or market share or market capitalization. Like Apple's not introducing any new products that would fundamentally shift the dial. There's no iPad or iWatch or iPhone coming that changes a paradigm of new growth. Maybe the car or the headset, but that hasn't been introduced yet. So the only way they keep going up is if they just increase these marginal things, like services. And I don't know if that gets them to 190, or at least not anytime soon. I would say, at least not anytime soon. Why does Mitt always talk about the RSI, but when he isn't a trader but a long-term investor? Well, I mean, the RSI is just an indicator. It's not like I'm trading based on the RSI. I just use it to kind of look at it. Obviously, long-term investor means you're in it for the long term, but just analyzing on the day-to-day, you look at some of these things and you try to see where things are going. But I don't really trade based on the RSI. I hope one day I get to the point in my life where I can have some money to play with to just trade. That would be kind of fun. But it's also like the attention it would take to like focus on just trading would also be like a lot. And like, I don't know if I have that much attention. Like just to stare at this shit all day and trade, like, I don't know if I care enough about that to do that. That's the hard part. Apple has been working on some secretive product very soon, maybe a year away. Well, I think the secretive product is just the headset. That's the only interesting thing. Like, there's nothing else I think they could be working on, and maybe I'm wrong because I don't know, but anything that's super, super revolutionary. Like the iPad, I don't think anyone expected that coming. That watch, we all expected that. The headset, and even if they do put out a headset, I don't know if it's going to be better than Meta's. I really don't. I don't know if it's going to be better than Meta. I don't know. So we will see. You know how my girlfriend less ass feels about trading. Guys, you got to make some music about how you feel about that, bro. If you guys don't know, Geis is a rapper. And we got to get some music on how you feel about this. How many RSIs? All of them. I regret Yep, Gabe taught me it. And AI phone. Yo, AI phone. Maybe that's what Apple comes up with. The AI phone. The AI phone. That would be crazy. Yeah, Gabe told me about the RSI like 5 months ago, and I was like, oh, perfect. That's makes a lot of sense. 70 sell, 45 neutral, 30 buy. There it is. My second lawsuit for game teaching mid RSI. All right, guys, I'm out today. Thank you all 247 people for joining. It means a lot to me. We'll be back with the market open tomorrow. Today's Friday, right? Today's Thursday. Tomorrow is Friday, getting closer to the end of the week. So yeah, I think we'll have SoFi weekly and Palantir weekly tomorrow. So we'll have those tomorrow. It is March 9th today. Guys dropping an EP tonight. All right, guys, make sure to hit me with the link. I'll try to put it on Twitter or some places so people can see as well. Please follow on Twitter. That is the only thing I ask. If you watch these morning opens, the only thing I ask is follow on Twitter. If you don't have a Twitter, make a Twitter, because Elon Musk has to pay $1 billion in debt. So he needs some help paying off his debt. So you might as well help him because he's like trying to save the world and stuff. But if not, follow on Twitter, link in the description, and that's it. All right, guys. Thank you so much. I will see you tomorrow on the morning open. Bye-bye.